let's talk about Warner Bros. Discovery, or WBD. This stock has been on an absolute tear, hitting highs we haven't seen in a year. But, when a stock rallies this hard, this fast, you got to ask the question, has it gone too far? Is it just too hot to handle right now? Today, we're going to break it all down.
So what's all the excitement about? Well, it all comes down to this number, $26.10. That right there, that's a brand new 52-week high for WBD. It's the top of the mountain, and it's got everyone buzzing.
And get this, it got there after a massive single-day jump of over 6%. So you see that, and the big question just pops into your head, right? Is it too late? Did I miss the boat? Or is this party just getting started? That's exactly what we're here to figure out.
Okay, so to really get what's going on, we have to start with the bull case. Let's dive into the powerful signals that are fueling this incredible rally. What exactly is everyone so excited about?
It really starts with this cool indicator called ADOSC. Now, just think of this as a smart money tracker. The big institutions, the major funds. This tells us if they're quietly buying up shares, that's accumulation, or if they're selling off. It's basically our sneak peek at what the big dogs are doing.
And for WBD, oh boy, the smart money is buying. The ADOSC is showing this huge positive number, over 88 million. That screams strong accumulation. And it's not just them. Look at the volume growth. It's picking up steam. And other key indicators, they're all flashing green. When you see Mama crossing over Fama, that's a classic uptrend confirmation. And the MACD is strongly positive, telling us this move has real force behind it. See, it's not just one thing, it's a whole chorus of signals singing the same bullish tune.
And check this out. You can really see the recent acceleration right here. The current price, over $26, is just flying high above its 5-day average and even further above its 20-day. That gap, the space between those numbers, is getting wider and wider. That's how you know the buying pressure has been absolutely intense lately.
And hey, this isn't just some flash in the pan. If we zoom out and look at the long-term picture, it's even more dramatic. The current price isn't just a little bit above its 200-day average. We're talking it's nearly double. Folks, that officially confirms we are deep into a sustained bull market for this stock. So far, so good, right?
Well, not so fast. A good analysis is never that simple. For every powerful rally, you have to look for the warning signs. And the big question becomes, is this party getting a little too crowded? Let's flip the coin and look at the words of warning.
And this is where the plot really thickens. We have two super reliable indicators telling us two completely different stories. On one hand, the MACD is still screaming, full speed ahead, the momentum is strong. But on the other hand, the RSI, that's the Relative Strength Index, is flashing a major warning sign. At over 77, it's deep in what we call overbought territory. Think of it like a rubber band that's been stretched way, way too far. Statistically, it's likely to snap back.
And if you thought that was bad, it gets even more stark. Another indicator, the Stokes RSI, isn't just high, it's maxed out. It's at 100. Analysts have a name for this, an immediate short-term exhaustion signal. It's like a car's engine hitting the absolute red line. It just can't go any faster. It's a huge red flag. So when all these exhaustion signals are flashing red, what does that mean if you're thinking about buying in right now? Well, it kind of boils down to this, frankly, tiny number, 0.0048. That's your current risk-to-reward ratio. A number this low is just a technical way of saying you'd be taking on a massive amount of risk for what could be very, very little potential gain at this price.
And this chart right here just drives that point home perfectly. Based on its recent trend, a statistical model would predict the price should be somewhere around $24.86. But where is it? It's all the way up at $26.08. That's almost a 5% deviation. The price has literally sprinted ahead of its own statistically probable path. It's running hot. Okay, so we've got a powerful bull market on one side and some serious short-term warning signs on the other. They're clashing head-to-head. So what's the move? What's the strategic takeaway from all this?
And the verdict is in. It's actually pretty clear when you put it all together. Yes, WBD is in a very strong, powerful, confirmed uptrend. That is not up for debate. But, and this is a huge but, that incredible move has also made it dangerously overbought in the short term. It's a classic case of a great party that might need a little break to catch its breath.
So what does a smart trader do with this info? It's not about just buy or sell. It's about strategy. Here's the playbook. Step 1, recognize the underlying strength. This trend is the real deal.
Step 2, acknowledge the immediate risk. The stock is exhausted and needs a break. So step 3, strategize. Instead of chasing it at the top, the technical play here is to wait for a pullback, let it cool off, and come back down to a more logical support level, maybe somewhere in that $25 to $25.50 zone. That would be a much safer entry point.
And that brings us to the final thought here. Chasing a stock that's running this hot is so tempting. That fear of missing out, FOMO, it's a powerful emotion. But what this analysis is really telling us is that in this specific situation, patience is the real power move. So the question I'll leave you with is this. In a market this hot, can you really afford not to be patient?